Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. I'm so excited because this week with me, I have Rob Levy, who is the co-founder of Hxro. We're going to get to the spelling of his company in a minute, but first of all, welcome, Rob. Welcome to Crypto and Blockchain Talk.
Thank you so much for having me. It's really a pleasure to be here.
I can't tell you, it's our pleasure for you to be here. Well, I'm so excited. But I gotta get this out there really quick. What's going on with the spelling of your own company? Hxro being Hxro. What's up?
That's a great question, and it's hilarious because nobody knows how to pronounce it, and we're having an existential crisis on our new landing page. Do we put it at the top? It's pronounced Hxro, but it's pronounced Hxro. We've got the X in there instead of the E, and the X, it represents a few different things. You know, X can be for exchange. X can be for this X factor that we bring with our platform. X can be kind of this X Games feel if you think about our platform when you compare it to like a traditional trading platform. So there's really a few different reasons, but I'm with you. We've had people calling it Hexaroo, like kangaroo, Hxro. They don't even try to pronounce it. A lot of people just say the letters Hxro, but it is pronounced Hxro, and hopefully we can make that more clear in the future. But I appreciate it because that is the first thing people think when they see it. What? How do you even say this?
Well, yeah, I think the Chinese people will also be very confused, as will people from any Spanish-speaking country. In Spain, this will be Hxro, and
yeah, right.
And it will be Hxro in Spain. So,
Oh, God. We got problems. Yeah, we're gonna have to figure this out.
Yeah, no worries, no worries. Look, it doesn't even matter what it's called, I guess. We'll go into later what exactly your platform does. We really hauled you on here because I'm really excited because you have a really great background. And before we go any further with the topic of this platform, which, by the way, I should state to everybody, we're going to be talking about how Bitcoin is competing with gold. We're going to talk about really Bitcoin in its essence and how it's actually holding up against gold as a commodity, maybe even throw in some other cryptocurrencies while we're having this conversation. But before we do that, I know for a fact our listeners like to know who I'm speaking to. Now, it says here that you joined the Chicago Board of Trade in January of 2011. Is that correct?
I joined the Chicago Board of Trade as a member in 2011, but I joined the Chicago Board Options Exchange as a member on January 2nd, 2001 was my first day as a market maker on the floor of the CBOE.
Wow.
And not sure if you've been to Chicago, but the CBOE is basically right across the street from the Chicago Board of Trade, which now goes by the CME because the CME bought the Chicago Board of Trade some years ago. But us traders down there, we still call it the Board of Trade because the agricultural products that I traded, those were just notorious Chicago Board of Trade products. And the other products at the CME, that the interest rate products were over at the Mercantile Exchange. So I had tenure at the CBOE and then the CME. So you're half correct.
Hey, listen, the fact that the half I had looks pale in comparison to the whole picture, I'm pretty impressed. And of course, you have experience as a senior trader in the options and futures market, and you are a crypto head. You're into this whole cryptosphere, but how did you get into cryptocurrency?
That's a great question. I remember vividly, I was a big Twitter guy, and I don't know when I opened my account, but maybe it was 2010-ish, but I remember distinctly standing in the pit, in the corn options pit at the Board of Trade, And I would be looking at Twitter because for me and for other traders, Twitter became the platform that trading and like breaking news for markets and traders would communicate there. I feel like traders really adapted to Twitter early, and it was such a useful tool. So I remember vividly standing in the corn options pit in the middle of the day, maybe during a lull, and I followed this account. I think it was like called The Price of Bitcoin. And at that point, it kind of tweeted, I don't know, every hour or so, every couple hours, the price of Bitcoin on 3 or 4 of the exchanges that existed at the time. One was Mt. Gox. And I would look at it, and no matter what the price was, if it was $100, if it was $400, the price difference between exchanges was large. And I looked at it, and I was like, you know what? This can't be that real or that heavily traded or have that much interest if the price is varying so greatly across a number of exchanges. I mean, for a living, I was trying to scrape fractions of pennies out of the corn options market. And I'm looking at Bitcoin and I'm like, there's just no way this is really anything serious if the price is so different across all these exchanges. And I also think that was one of the biggest mistakes I ever made. I should have immediately gone in and looked at it, but I kind of dismissed it early on, and I still, I majored in economics at Duke University. I studied economics. I've always been into markets, so it really is natural once I really dug into, okay, what is Bitcoin? And this was actually probably 2016. It hit me immediately, and I just went down the rabbit hole, and I knew how groundbreaking this technology was going to be.
So since then, you've seen Bitcoin go up and down like a yo-yo. Obviously, you were here for the crash of early 2018. You were here for the high of December 2017. You obviously have been watching what's been happening as of late. It's hovering somewhere around, 35 right now. I don't know at the exact minute what it is, but it's around there. Mm-hmm. So what do you think was going on in your mind when you saw this roller coaster developing from the moment that you saw it in the corn pit? Because if you have been watching this ride, what were you thinking during this whole time of Bitcoin's growth and adoption?
It's really unbelievable to me. But as someone who has been a participant on a professional level as a liquidity provider and market maker in different markets, we see the price of some of the most popular, heavily traded assets on earth. We see substantial moves in those markets all the time. It just happens. Stuff gets repriced. Everybody thinks that the markets are efficient and the markets are always right. I don't think that's the case. So to see this volatility in Bitcoin over the years, it's not that surprising. But what is surprising is that so many people dismissed it for so long. And at its core, it just makes sense. It makes sense, and maybe it makes sense to me because I'm an economics guy. A lot of people just kind of get scared because they think that it's technology and, I don't know anything about technology or computers or networks, and that can be scary for people. But at its foundation, it's relatively simple. It is a new way of storing value. And if you think about analog versus digital, this is really the same case. When you think about gold, for instance, as the store of value that has been around for hundreds, even thousands of years. And then you think about that as the analog or the rotary phone. And then you think about Bitcoin, and it's truly a digital version of it. And that to me is truly the essence. And maybe I'm naive, but for me, markets are markets. Like, markets are volatile no matter what. You look at something like Tesla, for instance, and how on earth can this company that is building electric cars, how can people have it so wrong 6 months ago that would cause the valuation of Tesla to go up 10 from what it was 6-8 months ago? We're looking at the numbers of how many cars they're selling, of everything so closely. How can people get it so wrong? Well, that's just what happens in markets. We get it wrong all the time. So the price movement for me, that's less shocking. What is unbelievable is how some of the smartest people on earth are focusing on Bitcoin and cryptocurrencies right now. And that's the beautiful thing.
Obviously, I have a number of theories to why Bitcoin is experiencing this sudden spurt in growth. And I think it comes down, obviously, to the fact that with the United States sending out stimulus checks, printing presses are going on overtime. But I was reading an article about how there may be another check coming out for each person for $2,000 apiece. I don't know whether that's true or not, but it's more money, which will be printed shortly. I think another one was just issued, which makes the second payment for people in the United States. So obviously, the more they print, the value of the dollar is going to feel the effect of that. Obviously, you're talking about trillions of dollars, trillions and trillions just being printed. Then, of course, you have companies like you mentioned, Twitter with Jack Dorsey. He's also the CEO of Square. And we know that Square invested $50 million, and I think they invested another $50 million on top of it into Bitcoin. And this, of course, is following hot on the heels of what's happened with PayPal and Venmo and a multitude of other companies and institutional investors jumping on that bandwagon and eyeing up not even eyeing it up. They put their cryptocurrency where their mouth is. They actually invested into Bitcoin and other cryptocurrencies, which we'll get into in just a moment. But there's a couple of things going on here as well, because if institutional investors, especially, if they are really going heavy into Bitcoin or crypto, then I'm assuming they're taking some of their investment out of gold. I'm assuming that. Right. Maybe that's the wrong assumption. What do you think?
I don't think that's the wrong assumption. I think that there are a lot of people who are doing that. I don't think everybody is doing that. And I don't think gold is really losing its luster or shine, if you would. I just think that its little brother is sexier right now. Mm-hmm. And it's just, to me, it makes more sense. It's a generational thing. You speak to like my parents and people at their age, and they don't necessarily get it. And one thing that I say to them, which it's maybe a little harsh, but it's, you know what? You guys don't have to get it, because the future is in the younger generations, and they need to get it. And it makes all the sense in the world to them. Everything to the younger generation is digital. I mean, everything. And for them to think about having bars of gold or storing some of their wealth or value in gold, that is crazy to them as Bitcoin is to the older generation. And the bottom line is the younger generations are what is moving this world forward, and that's the most important part. So it's taking away some of the investment money from gold, but I don't think for everybody that's the case. I think a lot of people, especially traditional people, they're keeping money in gold and they're just adding Bitcoin holdings as well, because it truly is a hedge for what you were speaking of, this inflation, this debasement of fiat currencies.
Mm-hmm. I kind of had a chuckle today because Edelweiss has actually come out saying that they believe that investors should be snatching up gold big time. They're recommending this, and they think that it's going to completely ramp up and head towards $2,800 an ounce in the next couple of years. Meanwhile, you head over, right? Just keep that in mind for what I just said. Meanwhile, you head over to JP Morgan, who has been saying actually for a while, even though, by the way, let's all remember Jamie Dimon, and I did a podcast on this, I think 2 years ago. He was the biggest naysayer. It could have been 3 years ago now, folks. He was the biggest naysayer of crypto. Of course, now they have their own cryptocurrency, mainly for their own in-house clients, but they have their own cryptocurrency. And now they've come out with a statement saying that Bitcoin can surge to 146,000, very random number, in the long term. So you compare these two articles. So you have one that says they don't give a time element on this. They didn't say when they think this 146,000 per Bitcoin is going to potentially be reached. Here you go. You have two statements where you have one saying, hey, listen, buy gold now because soon it's going to hit 2,800 an ounce. And then you have another statement saying buy Bitcoin because soon it's going to be 146,000 per Bitcoin. What do you think about those two statements released in tandem, literally on the same day?
I don't think about these two assets as competing in that way. Now, clearly, competition for people's attention and people's money is common, right? It happens every day. We make our decisions about where we want to store our wealth, our money, our pretty much everything. But I don't really see these two as so competitive. They can both go up together, and I think they will. I think, obviously, when you're looking as an investment manager, you're clearly looking to get the greatest returns for the lowest amount of risk. And, there's a lot of people that would say that there is less risk in gold because it is tried and true. It's been around for hundreds of years. It's pretty simple. It's gold. You can test it. It's either gold or it's fake gold that's painted tungsten. You can test gold, it. It doesn't mean that there's only one winner here. This is a huge marketplace. There are trillions and trillions and trillions of dollars across the globe, and it all needs a home. And is that money going to be sitting in accounts that are earning zero interest or even negative interest where you're paying an institution to hold your cash? Or are you going to try to search for ways to protect your wealth over generations? And I honestly think gold and Bitcoin, they both should increase in value in terms of other fiat currencies like the US dollar, like the euro, like the yen, renminbi, whatever you're looking at. So I don't look at it as a competition like Peter Schiff might, who is extremely vocal about why he thinks Bitcoin is worthless, and he's just been absolutely wrong since it was a few $100s. I mean, imagine that. Imagine being that wrong since it's literally gone up 100x. You're that wrong, and you're still touting how it's worthless. I mean, that's crazy to me. But it's not a competition to me. They both are good hedges, and they're both going to be used that way, and I think they both will increase in price. I do believe that Bitcoin will perform better over time. So I think that's the key.
I love everything you just said in terms of making it very clear that they're not competing. I do want to make one statement here before we go any further. As all of our listeners know, and our new listeners will learn from right now, nothing that we say in our podcast can be taken as investment advice. You need to do your own homework and your own due diligence and understand what is right for you and your pocket. And remember the golden rule: never invest more than you are willing to lose. So going back now to the subjects at hand, there's also more than 10 billion US dollars tied up in Bitcoin futures contracts. And as you know, Rob, you know very well, we are an educational program. So let's first talk about, can you define what a futures contract is and explain this to our listeners?
Sure. A futures contract is a derivative. And by derivative, it means that the price of a futures contract is derived from the price of the underlying asset. So a Bitcoin futures contract is derived from the price of Bitcoin. But in most futures contracts, like the one traded on the CME or like the one traded on Binance or FTX, there is no physical Bitcoin backing that futures contract. It gives market participants away an instrument where if they want exposure to that asset, it's a way for them to take a position and get exposure to that asset without actually having exposure to the physical asset itself. So if you are long a Bitcoin futures contract, and let's say you bought this Bitcoin futures contract at $10,000 and Bitcoin goes to $15,000, you get to enjoy that rise in price, that $5,000 per Bitcoin. You get to enjoy that and profit from that. You don't actually own Bitcoin. You own a contract that is moving in tandem with Bitcoin, derived from the physical price. So the futures market in general, futures markets were created, and I was a corn and soybean and wheat futures trader and options trader. And these were created for risk management and speculative purposes for assets where you couldn't necessarily buy a truckload of corn, but you needed to hedge it. And part of the name futures contract means that a lot of these contracts expire at some point in the future. So if there's a March Bitcoin futures contract, that means that contract expires on expiration day, whatever it is, the third Friday of the month. Different exchanges have different expirations, but it will expire at some point in the future. And at that point, if you still want to have that position, you have to roll your position into another contract, maybe the June, maybe the September or December. But these futures contracts do expire at some point. And Bitcoin itself, it doesn't expire. So it's a different type of asset, but it derives from the physical asset that is underlying.
What a beautiful explanation. So now, at this very moment in time, apparently there's 10 billion in open futures contracts. What do you see being the result of that in terms of other investors looking at this and thinking they have to jump on the boat? Do you think that's going to have some kind of really serious impact on their thought process?
I don't think that the layman looks at that and looks at a number of 10 billion and can, discern anything really important from that. It's actually a pretty small number. If you believe it, we grow over $50 billion worth of corn in the U.S. every year. It's like $10 billion of Bitcoin futures contracts. It's, to me, I'm like, okay, what is it? All right, that's great. I don't think it truly means that much. But the thing is, and why people look at the CME so closely, is that the CME is the chosen venue for the largest U.S. institutions and even global institutions. The CME, it's an exchange that's been around for hundreds of years. It's looked upon as having as close to zero counterparty risk as any other platform or exchange on Earth. And counterparty risk is a big deal because if you're trading instruments on some exchange and all of a sudden that exchange decides to just disappear and take all the money that's being held there, that's a problem. That's counterparty risk. Or if there are instruments on an exchange and one of the big traders on the exchange all of a sudden goes belly up because of positions they have elsewhere, then that exchange might not be able to make good on other positions. So the CME is looked upon as it's the standard. It is the gold standard of global derivatives exchanges. So for a lot of institutions, that in their mind is the only place that they would feel comfortable taking a position on Bitcoin. So what it tells me is that as the open interest and as the trading volume on CME grows, that is a true barometer for institutional involvement, and that growth is positive. But something else here, that doesn't mean that everybody who's trading CME futures is just buying them. There are plenty of institutions who are getting in there and taking a short position in futures on the CME. So I think that the thing to look at is the overall growth in activity and volume, because it does show you a clear look into what institutions are doing. Now, there are plenty of institutions who are getting into the Bitcoin market through other avenues like Coinbase or other exchanges. But the CME is the granddaddy of derivatives exchanges globally.
Just to reiterate, CME means Chicago Mercantile Exchange. A lot of articles, when they talk about Bitcoin and how well it's doing, many articles do not talk about the volatility. And if you have a position, if you hold a position and you say that you're betting on the price of Bitcoin going up and obviously it drops, then billions of dollars of these futures and options are going to be liquidated. That's not a good place to be. So, and by the way, I loved what you were saying about the corn. That's actually really fascinating information, that $50 billion of corn as a commodity, is being traded. Or did you say that was the total volume and valuation, or what is that?
Yeah, growing each year. Let's say the corn crop is 14 billion bushels in the U.S.
Wow.
In a year. And, corn is now, it traded above $5 per bushel yesterday after a big January crop report. So we're looking at a $70 billion crop for last growing season of yellow number 2 corn just in the U.S.
Yeah, I think you got to come out with corn coin, man.
Well, the funny thing is, I went from being a corn trader, and in crypto jargon, a lot of people refer to Bitcoin as corn. So it's funny because
that's hysterical.
It's like, yep, it went from one corn to the next. And I actually put out a tweet yesterday about the corn futures were limit up, meaning they had gone up the daily limit. And so I wrote, corn is limit up, but not the Bitcoin. This is the yellow corn that feeds the world.
That's awesome. That's so funny. Going back to what I was expressing, though, about option positions being liquidated, it still is, I think, a big problem, because let me explain. I am aware, and I'm hoping that everyone refers to previous podcasts being done where I've had experts on here who have expressed just how Bitcoin is very much in the hands of some pretty big whales. And these whales can easily play at this point in time still with the market, and market manipulation is a very real thing. One great thing, I don't know if you've ever seen this tool. I'm sure you have. It's called Whale Alert. I'm a huge fan of Whale Alert. I just like watching it. But Whale Watch is exciting to look at because every time you see not tens of millions or tens of thousands, we're talking hundreds of millions, if not billions of dollars in Bitcoin swooshing around the world, right? And this is, at this early stage, to see this, it can be a little disconcerting. Knowing that there are these whales out there who can easily do market manipulation, how does that factor? Because I don't think there's market manipulation going back to corn or even gold.
I'm going to tell you that the idea of whales trying to move markets is not new to Bitcoin. This has been around since markets existed. I mean, remember we had, was it the Bass brothers who tried to corner the silver market? There are whales in every market. This is a constant battle among the biggest institutions and the biggest players. They're fighting every single day, every single second in the high-frequency world in futures contracts across the globe. So this idea that whales and quote-unquote price manipulation is unique to Bitcoin, and I'm not saying that that's what you are saying, but it is not unique to Bitcoin. What is unique to the Bitcoin market is that there is a lot more transparency in the data. One of the biggest money makers for exchanges in the traditional world are that they sell their data, right? And you can't really see real-time trades. You can't just pipe into their API and see all the trades without paying a significant amount of money to access that data. And that's one of the beautiful things about crypto. Almost every single exchange, you can hook in right to their WebSocket, their API, and you can read the tape in real time. The Whale Alert Twitter account can pipe right in, write a script to get call for all the liquidations that go on that exchange, and in real time you can see them happening. Truth is, liquidations in derivatives markets take place every day, all day, in the foreign exchange markets, in CME, everywhere else. It's a different process. And part of the advancement in some of these crypto derivatives is that they have this auto liquidation mechanism where it's not going to be where someone from the Binance exchange gets on the phone and calls you and says, Rob, you know what? You need to put more margin in your account because Bitcoin's dropped $4,000 and you are out of collateral. Instead, they have a mechanism that shows it falls from 40,000 to 36,000. Your account margin is going to be at zero, and we're going to have to liquidate you unless you are able to put money in before that happens. So it's really the mechanism that's different, and this real-time, no-cost data transmission where anybody can access that real-time trade data on these crypto exchanges. So it's almost like we are getting a view. We just have a better view into what's going on. And we can't see all the liquidations on all of the other foreign exchange sites and CME and all the other derivatives exchanges in the traditional market.
I guess what I wanted to know then was, as a trader, if that personally, when you see what's happening with that volatility, does it scare you at any point where you go, hey, I like this corn. Corn's good to eat, and it puts food on my table.
This is a trading strategy that is used, that I use, that many users have used across the traditional markets, right? Right now, corn futures, they have every week, there's a commitment of traders report that is published by the CFTC. And it comes out every Friday afternoon. If it's a full week with no holidays, it's released Friday afternoon, maybe 4:30 p.m. Eastern Standard Time. And it tells everybody what the open interest is by different classifications. So they'll tell you that funds, hedge funds and different funds are long, call it 300,000 corn futures on a net basis. So what you do then, you look at the historical data and you're like, holy cow, this is close to the record amount of corn futures that funds have been long ever. And what does that tell you? It tells you that this boat is really loaded up on one side. And if a lot of people decide, you know what, this is the time I'm going to take my profits and get out, well, guess what? That boat is loaded, and it can really tip, and it can be a really rocky road if everybody decides to get off. And that's the same way that you should look at this type of open interest and these sort of liquidations. When anything is tilted too much to one side, you better be ready for some volatility, because the door is not big enough for everybody to exit when they want to. So if in any market, if you are on the side of the entire crowd and it is overloaded, you have to ask yourself the question, what is going to happen if something changes, or if, plain and simple, a good amount of people decide, you know what, this trade has been great. I've ridden corn from $3.50 to $5. It's time to take my profit. And at that point, if you've got something that's near record open interest and it's all on the long side, guess what? It can be a pretty ugly picture when people try to exit. So that does make me, as a trader, it makes the hair stand up on the back of your neck, because you know that there is volatility coming. And you can almost always guarantee that when you see an instrument that has a historical record positioning on one side or the other, whether it's long or short, you can pretty much bet you're going to see some mean reversion in the near future. Now, timing is everything. It doesn't mean it's going to happen immediately, but it happens. And that's just the case. So when the liquidations are flowing, you just know that's natural. And you look to, if you're a trader, you look to benefit from, holy cow, this is about to turn. I want to be on the other side when it turns. And when this finally does shake out, that's the time to get back in.
I'm loving these answers. I'm listening to them and I'm totally absorbing them. You're frying my brain.
Yeah, when the wheat market, when it had a record short, that was the best time to be long wheat. You might take pain because it doesn't mean it's going to turn around eventually. But guess what? Wheat is like the most widely used. We need wheat globally to make bread. Like, that is just plain and simple. Mm. And if anything ever happens to the wheat market, people need wheat immediately, and they'll do what they need to do. So you'd always look for the time when the wheat futures market got to like a record short position, and you just knew, okay, at some point soon, this is going to revert. And that was the time to be long wheat. So wheat's a market that tends to just cause pain to everybody in the most possible amount of time and the most possible ways. But those are some of the best signals to look for in any market. When it gets too one-sided and it gets to those sort of extreme levels, that's the time to really, really take a look, and probably the best time to get in.
I'm just looking right now at CoinMarketCap, and it is green across the board. It looks like Christmas. Actually, I shouldn't say it looks like Christmas because Christmas is green and red, but it literally is green across the board right now. Every single coin that you can think of, from the top 20 to every altcoin that's out there, it's absolutely crazy what's happening.
Yep.
Even coins that I wouldn't touch with somebody else's barge pole are going up. I mean, some of these coins, I'm laughing because I'm going, it's incredible. This does show also, in my opinion, that there are people investing in cryptocurrency who don't have the slightest clue. They want to get into crypto, so they are literally putting their money into anything and everything without even understanding what that coin does, what it represents, and what blockchain, if any, it's built on. But some of these cryptocurrencies are literally trash, and they are going up and up and up. And so people are getting into this without even thinking about it. They don't even understand what they're doing, which is a huge problem. And of course, this is how we got into the education space, because when people started to lose money and they were getting scammed on things like, OneCoin, Pincoin.
BitConnect was a pure Ponzi scam, and it had some up days when you'd be like, this is a scam. It's been proven it's a scam. Who on earth is buying this thing?
Yeah. I really wish a copy of this podcast would go out to every single person who ever thought of purchasing anything, because literally the whole board is lighting up green. You have Hxro, and Hxro is mainly focused on, it seems to be just Ethereum and Bitcoin. Is that correct?
Correct. On Hxro, you can use Hxro token. You can use Bitcoin, Ethereum, US dollar Tether, and USDC as well is being added. To go to your point about altcoins and what you're seeing today, I mean, the crypto market is the greatest market on earth. I'm telling you, there are so many layers to this market. It's truly remarkable. But here's one of the mechanisms that work right this very second, and that is that the crypto market in the past was pretty much everything was traded as a Bitcoin cross. And that means that Litecoin, Ethereum, the way to trade that on the exchange was the ETH BTC cross, meaning what is Ethereum trading in Bitcoin terms? And everybody would have to put Bitcoin on the exchange to then go buy Ethereum, right? So then you'd look, well, what is the ETH BTC cross trading? And the ETH might be trading 3 million Satoshis. So the ETH BTC market cross would be 0.03 Bitcoin. That would be the price. So everybody, if you wanted to go buy any altcoin, you had to first go buy Bitcoin, then move it to the exchange, then buy your altcoin with that Bitcoin. So the Bitcoin cross was the most focused. That was what everything was gauged in, was in terms of Bitcoin. That has changed recently. And now I think this last year more than ever, more and more coins had USDT and USDC crosses and other stable coins as well. So it made it much easier for you to go buy altcoins using a stable coin. You didn't have to trade your Bitcoin in and convert that. So what's going on right now is most altcoins have gotten absolutely smushed if you look at them in terms of Bitcoin, right? So the alt, and I call this like the alt BTC cross. So those charts have been absolutely decimated, and most altcoins have been making lows against Bitcoin because Bitcoin just went up 4 times in value from 10,000 to 40,000. And the altcoin just couldn't keep up.
Of course.
So right now, like today, we've entered this area where finally some of these altcoin Bitcoin charts are starting to look good on a technical basis. They've been hurt so badly, and now they're starting to look good, like market structure wise. So that's when you get this quote unquote alt season. When altcoins start performing in terms of Bitcoin, that is extremely powerful. And it's extremely powerful when Bitcoin is also going higher because you get this magnification. So let's say an altcoin increases in value by 10% in Bitcoin terms. Then Bitcoin also goes up 10% that day. Well, your altcoin is now up 20% in US dollar terms. So it is a very, very important thing to know when you're trading cryptocurrencies is that if the altcoin Bitcoin cross looks like garbage on the chart, then it's probably a good idea to stay away from buying that until that turns a little more constructive. Mm-hmm. And just lately, some of these charts have come off the mat and start to look constructive. And that's when you can see some truly remarkable gains. When you're looking on CoinMarketCap and you're seeing some of these altcoins up 20% in a day, well, a lot of that is because now they're just recovering some lost ground in terms of Bitcoin.
I can see how that can be, that they're covering lost ground because of Bitcoin. But I also think that some of these, there's just no way that people are investing in them because they think it's somehow a good alternative to a Bitcoin investment, because some of these are seriously outright trash.
You're
just trash.
Right. Do you remember? This is nothing new to human psychology and to markets in general. Mm-hmm. Do you remember the day that like Hertz filed for bankruptcy during the pandemic? Yes. And all of a sudden it's up 10 times its value because it was down. It got hit so hard, and all the kind of U.S. retail users and Robinhood users, they were just buying it up. And you're like, they basically just told us they're broke, mm-hmm. and that they're, without serious help, they're going out of business. And then I don't know if you followed Dave Portnoy from Barstool Sports and his Davey Day Trader stuff, but when there were some days during the recovery when we were coming back from the big market dump in March where he literally was rolling dice to get a stock symbol because he said, it doesn't matter. You give me any 4-letter symbol and we'll buy it and we'll make money. That happens during certain times in markets where it truly doesn't matter. You don't have to know what on earth that stock symbol does or that symbol does, but you buy it because just money is flowing. And that same principle, there's just certain times where that happens. It makes no sense, but it also separates the cream, like the best traders, from the rest, because the best assets should perform better than the ones that you might think are absolutely worthless. So it's not that surprising to me. We saw this during the dot-com boom. We saw this in the recovery after the COVID market crash. I mean, this is part of markets where it just happens. There's times where prices just levitate, and you can throw a dart or a monkey can pick one, and it can outperform something that's really solid on any given day. It's crazy.
Let's talk now about, okay, so Hxro is your baby. And yep. When did you launch Hxro?
So we launched Hxro in middle of 2018. And it really came from my partner, Dan Gunsberg, and I. We had started a small fund. We were trading together, and we were in the coach house of one of my close friends and put an office in there. They weren't using it, and we'd be sitting there all day watching these markets. And truly fascinating stuff watching these markets. And we'd be reminiscing like all old pit traders and floor traders do about the days in the pit. And we came up with what we thought was a simplified way to play the markets. And a simplified way to play the markets without leverage, right? Without auto liquidations, without any of that stuff, where people were going in with their eyes wide open about exactly what they could lose right up front, predefined risk, and create a product that brought the emotional rush, the excitement, the feeling that we had every day in the trading pit and on trading desks, and bringing that to products that were simple, fair, and transparent. And we came up with this product, the first one called Moon Rect, which we took, right out of crypto terminology. The moon, everybody asked that question, when moon? When is my holding, when is my bag going to go higher? So moon represents the price going higher, and then rect, which is a term for when your bag or your holding, the price gets wrecked. Mm-hmm. It goes lower. So we came up with this product, Moon Rect, and basically Moon Rect is a product that it is perfectly aligned with the chart. And the chart is the best and most widely used tool to track the market and track price movement in a standardized way. And the candlestick chart is one of the most popular forms of a chart, where a green candle means that the price at the end of that time period is above the price at the beginning of that time period, and a red candle means that the price at the end of that time period is below the beginning. So Moon Rect basically lets people say, okay, this next daily candle of Bitcoin, is the price going to be higher or lower? Is Bitcoin going to go up on the next daily candle or down? Is it going to be green or red? And with these products, Moon Rect, it's peer-to-peer. So you're not in an order book competing against the high-frequency traders. You put whatever you want, the position you want. If you want to take, call it $100 worth of value of a position, you put that into the pool, and the winning side takes the whole pool. So very fair, very transparent. It's pool-based. Parimutuel payout. Is the crowd leaning more on the moon side? Everybody thinks we're going higher every day, every hour, every 15 minutes. Or is the crowd leaning on the rect side? And the odds, or the payout odds, will change based on how many people and how much notional positions are opened either on the moon side or the rect side. We came up with this product as we're staring at charts all day long, similar to the types of little games that we would play in the trading pit, on trading desks. And we said, you know what? Let's build this thing. And that was the middle of 2018, and that's what we decided to do.
Well, I think that's fabulous. That's a great backstory. I could just see you guys there with your stogies and your whiskeys or your Lagavulin scotches and with your feet up saying, how are we going to do this?
It was just hilarious. When we released the MVP, the beta, we released it on New Year's Day, January 1st, 2019.
Right.
And we had like 35 of some of the top crypto Twitter traders and market guys in there, and we sent them just private invitations, check this out. And I'll tell you what, it was one of the most remarkable and exhilarating and fun days when you get your MVP product in the hands of people and they just loved it. And hours and hours and hours on end, they were just everyone was just there. And the chat room we had built on Telegram, the Hxro beta room, it was on fire. And people awesome. Just said, holy cow, this is a remarkable product. I love it. And the it's perpetual in nature. So at the end of every candle, a new candle starts. So there's always a new trade right ahead of you. And it was so great to see that reaction. We've just never looked back.
So what's the next step then after Hxro?
Just launched a couple months ago. We launched our second product, which is called Wix, which we are really, really excited about. And this product actually is a partnership with FTX, which is one of the fastest growing, just most impressive crypto exchanges on earth. So part of our token model, we have this liquidity producer pool where users can stake Hxro that they own, and they can provide liquidity in our products and on the exchange, and they can share in a portion of the transaction fees that are generated. And we had spoken with Sam Bankman-Fried from FTX, who's just top visionary in the space. He's such a smart and thoughtful and straightforward guy. He wanted to participate in the LPP. And Dan and I were talking about Hxro, this product we have designed, and just said, you know what, our fastest way to get to market on this, we do this with the right partner. And we brought it to Sam, and he loved it. First conversation, he loved it. He saw the vision. He said, let's do this together. So we put that product out with FTX utilizing their top-tier technology and trading engine. And that was at the end of October. And it has been fantastic, and we're doing more with that product itself as well. And it's great. I mean, there's two types of contracts in Hxro. There's one that's called a TIX contract, which is based on where the price will close on a given day. And the Wix contract is basically where the price will touch. Doesn't need to close anywhere. It's just the touch. And that is a play on words with the wicks on a chart. You know, those nasty wicks where price moves far in one direction and then it immediately snaps back. You rarely can take advantage of that unless you have orders sitting in the book, but these Wix contracts let you take advantage of that, because if you say Bitcoin's going to touch 50,000 by the end of March and it goes up and touches 50,000 and then comes back down to 35,000, you still win and you still profit from that contract. You don't have to have your order in there to get out. So these are truly unique, and we've received great feedback from the early users, and we're now focusing on really expanding this product set.
It's amazing. I'm actually looking at it now.
These instruments are, to me, fantastic ways to get exposure and really kind of even learn about these markets.
Who's allowed to access this?
Well, most everybody. Unfortunately, Hxro services and Hxro token are prohibited for use in the United States and some other restricted jurisdictions.
I would like to draw everyone's attention to Hxro, Hxro.io. Rob, I would like to thank you for coming on to Crypto and Blockchain Talk. We have had such a great time with you, and you are very knowledgeable about everything in this space, and it's a pure pleasure to talk to you.
This has been great. I really, really enjoyed the conversation. You asked great questions. You're talking about the right stuff. I do not think there is a more exciting place to be when it comes to markets and when it comes to technology and financial technology than Bitcoin and crypto itself right now. And the bottom line, it's not too late. You know, we're not telling people to get in and just start buying $35,000 Bitcoin. But believe me, it's not too late. This is early. This is still early. So start reading up, start learning about this stuff, because this is the future. I have no doubt about that. And it's great to have people like you putting out this wonderful educational material, and we need more of it. So I applaud you. Thanks so much.
Oh, you're so welcome. Well, I'd like to thank all of our listeners for tuning into this week's Crypto and Blockchain Talk. Tell your friends and family to download us on a multitude of podcasting platforms. The full list is on cryptoandblockchaintalk.com. And I'd like to announce the addition of our latest podcasting partner, Verbal. We are so excited to be on your platform. Remember, we also stream these podcasts on Crypto 24 Radio, 24 hours a day, 7 days a week, heard around the world, news, music, and more. But the best way to get in touch with us, in case you have any questions or recommendations on what you want us to cover, is by emailing us. So please email us at education@savvydigital. That's education@savvy, SAVII digital.com. Thank you again for tuning in. We love having you as our listener. So please be safe, take care, and we will see you soon. Goodbye.